So it's almost end of the year, and I'll be now doing a review on the last week of the year. It's currently 30th of December 2023, and I'm going to review the price action from 25 to 29, from the 25th to 29th. No, I don't know how you say that, but it's the price action from 25 to 29. Mention what happened, what went wrong, especially on the DXY and on yes, that those are my main markets. And my goals for the next year are very likely to be get more involved with other markets, especially trying to trade forex London session on the morning. And yeah, that's basically it. And I have other goals, other things that I'm doing. But right now, yeah, that's it. I'm going to review this week. So this week started with me mentioning that on the past week that I'm sorry, but I'm a little sick. But I mentioned that there's no point on trying to trade. Like I saw Romeo, which is one of my mentors and someone that I respect, trading Thursday on US 100 Nasdaq, and I was like, there's no need to try to trade it, even though that there are news, there are no. So I had to sneeze. But even though that there were news, orange, there were no red news for today. So I think there's no need to try to trade this last week. I think that's this last week of a year, of a month, of a quarter, of a 6 month quarter, a 6 month candlestick, or six half a year. It's better to review, to analyze, and to not forecast, but prepare for the next time cycle. In that case, so if a year ends, or if a yearly candlestick ends, you want to study that candlestick, you want to recap, analyze that time cycle in question, that entire year, and then forecast and prepare and make a plan for the next time cycle. So the same thing that you'll do with the market, like you a year ends and you review it, and then so 2023 ends and you review 2023, you review your trades, you do all of that things that you have to do, and then you forecast and you plan your goals for 24. Then you make a plan. You try to not achieve 2024 and like run 2024, but you want to play 2024 like a marathon, slowly achieving our things, getting goal setting, achieving those goals, planning, analyzing what's going to happen, and things like that. So for me, ending past week and now foreshadowing on Sunday before the week opening, I mentioned that it. I'm going to show you, but there was no need to try to trade. No red news. The year is closing. Uh, the 6 month candlestick, so the second half of the year is closing. The half of the half, so 12 months divided by 2 goes to 6, and 6 divided by 2 goes to 3. So the 3 month quarters, the quarters in this case are ending, so everything is ending. There's no need to try to catch an high or a low or try to catch a trade. I think that the only thing that you could be doing right now is managing a trade, possibly, and it will be not a short-term trade, but a more swing trade, in my opinion. Not trying to intraday trade. Take your deserved rest and work on other things outside of trading, because there's no need to try to start trading right now. So these were the news. Monday was Christmas, so happy Christmas to everyone. Tuesday, so no news on Monday and Tuesday. Probably Monday market was closed. I'm not sure. I have to see because I was not studying the markets today. Wednesday, you have red news, orange news. Thursday, orange news at 8:30 and 10, and Friday 9:45 news. Orange as well, so no need to try to engage. So let's just read. Yeah, like I mentioned, there's no need to try to trade this kind of 6Y because that time frame move is done, because there's no time frame level to trade, and trying to trade these conditions are not needed and not the best. As well as not the market makers, but those like JP Morgan and those hedge funds that have high liquidity, high time frame stop losses and high volume, meaning that those highs, these lows, like these high time frames, highs and lows have a lot of uh, stop loss in the amount of volume. So in an intraday, imagine that a swing low has like uh, $5 million on stop losses. These swings, these yearly swings have a lot of more volume, more money in those stop loss. So imagine that at this October low, there's like 500 million volume on a stop loss. So there's no point on trying to engage because this stop loss is taken. So this is buy side liquidity, this is buy stops, and that currently uh, hedge funds are on their holidays. So there's no point in trying to engage. It's the holidays. It's the now high close of the year. There's no need to try to catch moves. So going fast because this is only 30 minutes. I was mentioning this eye. Why did I add this black line on this eye? Because because everyone has now two options. Retail is either trying to buy and chase higher prices, which means that there are more buy side in the market, and then there are some, I will not say smart money, but some kind of dumb smart money that are trying to get the top. That's the same idea for me that I think that USD, that gold, that this top on gold is going to be taken very not like in the next month, but it's going to be taken very soon because it's a fast down close candlestick, and now there are a lot of stop losses here because people are always trying to catch highs and lows. They're always trying to chase, and when they see a big down close candle on the monthly, not monthly but the weekly, this big down close candle on gold, they are not trying to short that. So a lot of ICT and the money is trying to catch this top right here. So that's why after an high time frame liquidity pool, in this case the 2022 I on EX was taken, you need to be careful and expect range consolidation. So not don't try to short that I unless you're really confident that that I was already pressed a lot of times. So this I was made, and it's very likely that was taken shortly after because that's how it's made. After this candlestick is, so that's how ICT uh, partials out on his trade. So he has a specific name for this concept. I'm not sure. Well, I'm not remember on top of my head, but he's always trying to. Um, so if he was buying here and liquidity pool, the main item from liquidity pool was taken, he was not trying to sell at his eyes because he know that buy side is here, because he know that people are always trying to chase, and right now people are chasing buys and sells, and that's why price accumulates at these levels, and that's why price shops a lot of traders right here, back and forth, back and forth. Give me a second, I will put this here so I can be more professional. Okay, let's put this here. So price went down right here, shops a lot, then makes that fast purge, displacement, kill, and then goes back down. So this is what happens. So next year, January, February, a lot of accumulation is going to happen right here, trying to take traders out because indeed price can go lower, and I think that is I likely because you're above a buy side, but you don't need, and it's not high probability and safe in some sense to try to catch a time frame highs, because imagine that you're trying to catch this turtle soup right here and you have low time frame entry, low time frame stop loss, we are going to get fucked out of the trade and violated. So after this time frame drawn liquidity is taken, a time frame buy side pull at time frame, liquidity pool is taken, give time for the market to do its thing. So especially as it's an open low high close, and especially because right now we are going to see a lot of consolidation, range bound consolidation, and that's going to be a candlestick that's going to go higher, 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 making that should swing where then we can see lower prices. So just give time for the market to do its thing right now. Don't try to engage. That's why I'm going to stay out a lot more. So I can hide this. Okay. So that was my point on ES. On the chart is even more de explicar que ainda é mais clear a strong liquidity because fast Wednesday candlestick on downside into a fair value gap. Now everyone wants to be bearish. Every RCT trader thinks that this is a displacement when it's not. Just pop above high, adjust us on downside into key level, then continue because buy side was formed here. This was a I think 14 for a candlestick on the 4-hour chart on Thursday. That was a bit on close candle, but we're going to see it on the charts. So same thing on NQ, looking at the size as a buy side pull. This is EM, same thing, EM as a range. DXY, I expect, on DXY I was actually wrong, and I'm going to talk about it, but I was expecting this previous low to be taken, and then price to go higher into this fair value gap, and I'm going to mention why I was wrong, what could I be, could I do different, and other things. But yeah, I'm expecting resistance on the upside. Just give a short-term like scalpy trade to take some buy side inside of the previous down close candle. So I was looking at some of these. So inside of this weekly candlestick, so I mentioned that this is a weekly candlestick, right? Inside of these there are other candlesticks, so you need the open. So I mentioned that this is Monday, Tuesday, Wednesday, Thursday, and then Friday to close it. So imagine that this is next week now, and the next week I was looking at some of these eyes. So not looking at the previous week eye, not looking at this eye, but looking at some eyes inside of it, especially the inversion fair value gap or this fair value gap eye. So I was looking for some buys to then price consolidate or trade lower, whatever it's going to do. I was mainly looking for buys. It's Control Shift 7. Yes, I got it right. And this is Control Shift 1. Okay. So this was my idea on the start of the week. Give me a second. Yeah, I was especially this. So this guys I like daily buy side looking inside of the previous candlestick, so I could view this Friday eye as a buy side pull, this Thursday's eye, and this eye, and so on and so on. So I was looking especially at this, which is going to be wrong. So let's jump into the charts. I have 20 minutes because the recording is ending, and 30 minutes because there's no need to make this as long as it doesn't need to be that long. So jumping on DXY because that's the most important. Let's go on the monthly. I think I don't need Epic tool right now, so let me just close this. Yeah, I think I have now this tool right here. So on a 3-month price draw lower into the Q3 discount week. Let me just put the quarterly levels. Price also reached back into the busy consequent encroachment. These are the yearly. This is not for now. So that's mostly it. We made the DXY yearly low, DXY yearly high, so low on Q3 on the second half of the yearly, and then we had the high of the year on the second half as well on the Q3. On the monthly, I can see that as well as reaching into the 3-month discount week, consequent encroachment, we also had price reach into the 1-month discount week. So I can completely forget about that one and just focus on the 1-month discount week candlestick, which is also price reaching back into this fair value gap. So on the future, I really think that price is going to trade lower on DXY. I'll not talk about this a lot about it because those are more high time frame ideas, especially on like for 2024, 2025, more for the 2026, for more of the future years, so long-term ideas. But I think that is we are going to go lower, especially because the 12-month candlestick was an inside candle. So that means that 2024 and 2025 are going to be full, are going to be outside candlesticks, and mean that we are going to see a lot of big candlesticks, big bulky candlesticks that want to move a lot. So I want to just focus on the discount week for for the Q2. So I was mentioning, I want to focus more on the discount week for not the 3 month, but the monthly, which is the July candlestick, which was half. So this is where the yearly candlestick opens. Then this is half of the year, another half of the year. So open low I because it's a September. I close open I for the Q4 low and now close. So let's see this big discount week. Which what is it on the weekly time frame? Okay, it's nothing that important yet. We can see my drawn liquidity and key level. You can see also the that I mentioned the monthly. What the fuck is this? Okay. I can see this. Let's just take off the monthly key levels because this is the dealing range. 2022 low, 2023 low, 2023 high. So now this premium discount week is what we have on the premium side. This 1 week inversion of a value gap, which I mentioned I was looking at it. But that was right now it was disrespected on downside, so we created this discount week. And as we can see, that the low that was expecting to be a turtle soup was actually a continuation lower on the time frames. So this week we have price opening, making this high, reaching into the range low that I thought was going to be a turtle soup, so range low to range high trade. But instead, we had this continuation lower into the monthly discount week consequent encroachment. So 1 month, 1 week, and 1 day. And that's the best way to do the week. So if you have a big week, especially if you're looking at a discount week, at the week consequent encroachment, you have imagine a 4 hour discount week, right? We're looking at a 4 hour week consequent encroachment. So imagine that this is a 4 hour chart, and we're looking at this 4 hour week discount consequent encroachment. It's a 15-minute, the 15-minute discount array. Same thing here. So if I go on a weekly, you can see nothing clear, but on the daily, you can find that inside of that consequent encroachment level of the 1 month discount week, we have this balance price range, but more especially we have this fair value gap, which price retraced to and respected this daily intermediate term low. So you can see that the weakening below the 1 week fair value gap or inversion fair value gap was really because price needed to reach a discount of the premium of the discount of the 1 month discount week consequent encroachment. So it needed to reach a discount of this. So it weakened below the item frame pre-array into this low, creating equal lows, which are going to be used later as a normal liquidity. Right now, I think the price can actually go higher before going lower, but not looking at neither foreshadowing. I'm just analyzing. So this week we have the Monday, which was 25, which was Christmas. So now, isn't it funny that DXY only reversed on Thursday? Was it arrived at the discount week consecutive corresponding on the monthly chart, which is this 1 day fair value gap, right? As well as this intermediate low was respected, and on this intermediate low, there's also a big wick that price traded to and respected as well. So yeah, that's basically it for the daily chart. We have my range, which was not respected. So my idea was that this Friday low is going to be respected, and then we'll see Monday, Tuesday, blah blah blah, trade higher. Instead, we saw that Monday open, created this not even candlestick. This is nothing, but just stay on consolidation all day. Then what I can see on this range, it was that Friday closed below the range, and that's fine sometimes. But and that's fine why? Because we want to see accumulation below the range. So below a range low, it's fine to see accumulation at it. But after some time of accumulation, you really want to see these eyes being taken. So what I mean by that, so the eye that traded to the range low, so this was the Judas swing, right off the range. So that's the Judas swing. You want to see this level then traded above. Let me get my brush. So you want to see this level traded above, retested, and then continue. Then retest this as a breaker block. This is my understanding on price, and I can be completely wrong. But I think that this is what my studies and my experience on the market and studying turtle soup and Romeo taught me. But at this, so this manipulation phase of this PO3 is going to be viewed as a Judas swing, displacement, breaker, continuation. What did we saw instead of this reversal? We saw a continuation lower. So this range low then was broke below, and price was unable to break back above it. So this I needed to be market starter shift. If you use this I as a market starter shift, you can do, this is the breaker, right? Then you will be stopped out because this was the I before the fast leg lower, which is a shoulder swing. So this will be accumulation, right? Accumulation, manipulation, distribution, right? That concept of power of three ranges, everything works together. But you need to be careful because sometimes this is not a manipulation, and this is indeed just price going to continue on downside because it wants to go to another key level where then the reversal is going to happen. So look at this, intermittent low, intermittent high as the last leg lower into the key level, which was then break back above it. In this case, we have price retest back to it, but we can see that later in the future maybe price can go back here as a breaker and then continue the upside. So this is my current study of price and my knowledge, and I can be completely wrong. So this is for me. This is for me to get more interesting in studying because you only look at these candlesticks, even though if you can make a lot of money, you only look at them because you love them. It's impossible for you after 1 year keep having that happiness and that angriness to keep looking at these candles and not be bored by them. So yeah, that's what I'm recording, trying to help someone that is watching. That's it. So my range was not respected, and that price traded lower into this. So like I mentioned, Monday accumulation, Tuesday traded higher, making the eye of the week into the range low that was now used like as a balance price range on some sense or as an eye time frame what it's called immediate rebalance something like that. Yeah, immediate rebalance. Then we had the Wednesday expansion, Thursday low of the week, so change of state of delivery one. So open, Tuesday high, Thursday low, Then from Thursday, change on state of delivery. So first to make the high, second to make the low, and then we have the close of the weekly candlestick. On the 4-hour chart, we can see that the price break below it and that it's respecting this order block. And we don't want to see, or if you're looking for reversals, so if you expect this to be a reversal, then you want to see and you expect price to give you not to you expect price after the manipulation, after the Judas swing, to break above um, premium array. So if you're expecting a bullish reversal, let me just get the drawing tool. Drawing. Okay, right. So if you have expecting a bullish reversal, right? Let's mention that this was the last leg lower. You then expect bullish PD arrays to be formed, to be respected, and expect the previous fair value gaps, the previous order blocks, previous premium arrays to be then used as support and be violated, right? And that did not happen. What did happen instead? We can see that this order block was indeed respected and not violated. So if indeed the reversal would happen right here, we'll need to see this bearish PD array slash premium array violated, retested as support, then continue. Then this will need to be used as an inversion gap, then continue on the upside. So that's not a gem, but something that you need to be about. So if you want to trade reversals and you bought here, and you could bought here and be profitable. Like imagine that you buy here, you have the stop loss at the low. Like your trade to here is already 2R, so you could take a partial out, but you only want to auto trade if you're bullish. So if you're expecting a bullish turtle soup, bullish reversal, so price was bearish and I want bullish, you want to see bearish and premium arrays being violated. If you're bearish and you want to see a bearish reversal, a bearish continuation, whatever, you want to see bullish PD arrays being violated, and then later on used as a stepping stone for the algorithm to continue delivering. Instead, we saw something different. We saw Monday. Monday was close gap. Tuesday trading higher into the order block, and price was not able to violate it and close above it. So it was not able to break above this premium array, and instead price continuously delivered lower. Same thing. And Wednesday expansion. Continue. Then we have 19 on Wednesday, 23 London low of the day. Thursday as well as the London low of the week. Expansion. Return to this fair value gap, and then the price traded higher, almost reaching into this high, trading into a candlestick, trading back to premium of the weekly range from high to low. So what I mean by this, from this high to this low, price then later of the week on Thursday expanded back to a premium, closing the candlestick. So how could I have been a part of this movement? Because that's something I want to do. When backtesting the weekly candlestick, you want to be doing two things, which is what did I do wrong and what can I do right. So if you did nothing wrong, you just have to ask a question: how can I do more of what is right? If you did nothing and just want to study like I'm doing, you want to be how could I have been part of this move? So I was wrong on the range. So imagine that I was going to buy here this range, right? Imagine that I entered the idea knowing that a range low was going to be formed, a range low was going to be burst, and then a bullish reversal was going to happen on the upside. That means that I would be wrong and my stop loss was going to be out. So that was what I did previously, talking how could I have been and have a confirmation that I was right and not wrong. And I was seeing this order block this bearish order block violated, which we didn't saw. So once I saw this 1 week, 2 weeks, 3 weeks, 4 weeks, 5 weeks at it, there's no need to try to hold the trade more, because on a reversal you want the price to quickly expand from the reversal low. We can see some accumulation, sometimes happens, but don't see price quickly and break above this order block, this bearish order block. That was not so. The biggest move of the week. I was probably not going to catch it. Why? Because we have this equalize right here. This equalize right here make me not I likely try to catch this trade. So what's the second trade on the candlestick? We can try this continuation. So, but as you can see, if we have this entry here, stop loss here, we'll probably be out by the spread. So what would I do? If I can't catch the first change on set of delivery, the first reversal of any candlestick, which is making a high or a low. In this case, because it's a bearish candlestick, it first needs to open and make the high. So because I was not able or not comfortable to catch the high, I will wait everything. I can trade the continuation if I want. So it's then the break on the upside, I can trade the continuation. But if I can't catch neither the break, neither nothing, I can then try to catch the reversal on the downside to make the low and then the close, the low and then the close, which is also another reversal. So reversal 1, reversal 2, change on state of delivery 1, or OZOC, then the second OZOC to then close the candlestick, and that will be, I will be trying to catch this Thursday low, this Thursday low of the week, trying to at least see price trade back into this fair value gap. That it was going to be what I will try to do. On the hourly, how could I have done that? So what can I see? I can see that on Wednesday, so on the first 12. I think I'm not wrong, right? Let me just check, because I'm also studying that. That's the thing. So by teaching, you can get better. So that's why I'm saying don't take this for granted. Don't think that I'm right. Let's say that it's 19 candlesticks. That would make 45. 45 half of the candlestick. So let's imagine that this is half 1 and half 2, and I can see that on half 2 is I likely to make the second, the chances of delivery, and that's correct from my studies. What can I say? That we open the second half, consolidation, Judas on downside, turtle soup, accumulation at this turtle soup. So on the 5 minute, I can see that price accumulated after. So yes, 15 minutes because it's too low. So opening below the opening price of the second half of the candlestick, of the weekly candlestick, accumulation, fake low, trading higher back to the opening price. Last leg lower, turtle soup, a big down close candle, meaning that this is an order block. That is on 30-minute order block, very possibly, yep. And then price reject that, expanded higher, use this inversion fair value gap as a accumulation, as an accumulation place for longs, accumulation, and then me especially, I will lose the breaker for this. So if I was going to trade this, I was expecting price then to trade lower. So let me just put this I right here because I'm trying to catch low time frame I, meaning that this right here will be the target. And after closing above it like this, I will especially try to catch a trade like this, very probably a 2R. And this will be a good trade for me, or I can put the stop loss here because it's an intermittent low, and this will be a great stop loss, a great trade for in my idea. So that's everything for DXY. I don't trade this. I don't know the timings, but I know the essentials. And I don't know the essential. I'm still studying, so yeah, that's it. I won't say more. So I just spend most of the time in DXY because uh also just a quick notice where the order block was formed on the premium week. A bearish order block. Notice as well. Let me just give you this now. So let's talk about the breaker. That was my entry. Let's see the breaker on the I time frame. I think I have to extend it to show. I have to extend it a little bit more. Notice where the breaker was as well on the discount week. If you're trying to catch a reversal or any time any candlestick, so bullish candlestick, you want to trade the week like I mentioned on the previous on the first recording. I think I did that. This is the best place to try to catch a weekly reversal. Same thing for the day. If you're expecting a bullish candlestick on the upside, you want to trade the week, the discount week. If you're expecting a bearish candlestick on the downside, you want to trade the premium week. Okay, let's go to DXY now. EX1, so ES, I'm sorry. So, same thing. I think yes has nothing to say about it. My time frame key level traded to on the weekly. Yes, the eye was indeed taken. So, notice our price is creating small candlesticks. This means that accumulation is high likely, like I mentioned, coupled with everything that I mentioned on the notion side, coupled with that this is probably creating a market maker sell model or market maker buy model, then will go lower, then go higher, whatever. But it's right now creating range and accumulation and choppiness like Euro. Euro after traded into this low, making a new low of the year. So after this happened, what can we see? A lot of sharpness, small candlesticks, small candlesticks. And either you can have a good entry, either you can have a open stop loss, or you can be completely fucked. Because if you are trying to trade this, the only place to put a stop loss will be at these lows, either midterm low or nothing. So you need to be careful about trying to catch item like yearly lows, yearly highs, 6 month lows, 6 month highs, and put your focus and my focus especially on 3 month highs, on monthly highs or lows, like on the monthly open low close, on the 3 month open high close, on the weekly OZOC, which is the weekly open high low close. So let's go back into what matters, which is the ES. And yes, my idea was indeed correct, but that's not bragging, just mentioning that even though that I can be correct on my analysis, I did not trade it. There's no need to try to trade it. And I think, like I mentioned, I'm a bad trader at the moment. I don't have any funded account. I don't have profit splits, nothing, because I'm not good at trading yet. And that's something that I want to work on 2023, which is 2024, which is studying, not studying less, but analyzing less and executing more. That's one thing. I don't view myself as someone that is good because I can analyze, but I can't execute on it. So on the weekly open, weekly low, weekly high, weekly close. Based on this, I will try to catch the high close trade, which is also coupled with the DXY low to close trade. So it's the DXY and DX like the XY USD is correlated most of the time. Sometimes it's not, but it's most of the time is correlated. Daily. Uh, Monday immediately. No, Tuesday. I'm sorry, because Monday did not trade it. It was Christmas. But Tuesday we opened immediately trade higher into the previous week high, which was drawn liquidity. This was followed by small candlesticks showing accumulation on low time frames. So Wednesday accumulation, Thursday accumulation as well, making the high of the week, and then Friday we have this down close candlestick back into the range, making where Thursday and Friday made the entire weekly candlestick range. So the Thursday high was the high of the week, and the Friday low was the weekly low, the low of the week. Going low time frame, like even though that you can catch a trade like this, I don't know. I think there's no like a 4 pip, not 4 pip, a 4 point stop loss is not like I don't know. I'm not interested in trying to trade on these conditions. I think even if you're trying to trade them, like find accounts a 4 handle stop loss that can sometimes not the best idea. So on the 4 hour, what can I say? Yes, that was what I mentioned. It was a previous week Wednesday, big down close candlestick, which means what? It means that a lot of traders are trying to chase this downside movement. So whenever there's high volume candlesticks, I always try to trade against them. So that's why sometimes CPI is a big down close candle and then boom, it reverses. So you need to be careful about that. But yeah, we have this I taken on Tuesday. So in my idea, if you're trying to trade, I was trying to get a trade like this from, but as you can see, what 150, not ideal. So look at these candlesticks. It looked like a 15-minute candlestick, not a 4 hour candlestick or a 5 minute. It's very small, showing that it's not a probability and showing that it's no need to try to force movements on this. Oh, time is already past. It's already 41 minutes. But yes, you have a buy side liquidity, one purge above it, accumulation below it. A lot of people try to catch this the Tuesday of the week. Accumulation back into this fair value gap. Price then expand on the upside on the really Judas of the weekly candlestick. Closing above it, accumulation above it, not able to break above these highs. Fair value gap, coupled with an inversion fair value gap, then this leg lower on Friday into the Wednesday lows, Thursday lows, and as well into the Tuesday's lows, making the making the Friday low of the week and Wednesday high of the week, which is already Thursday if you count the new week opening gap. So Monday 18, markets open back at Monday 19. So the markets were open. Oh, okay, I understand. So this is Tuesday, new week opening, new day opening gap. The new day open. Okay, I get it. Higher. First eye, accumulation below it. The real Judas, which was a big bulky candlestick on the upside. So if lower prices are expected, then we want to see this as a order block slash balance price range, whatever. So you can see close above it, fair value gap, and our price is likely to trade lower. Trade lower where? Probably this low right here. Would be my idea. So this will be a 3R possibly. You could put a stop loss here, but this I can be taken. But I'm not trying to call the market. Just chilling, not putting that many time. Just doing my review on Saturday. So that's basically it. We have C1, C2, accumulation at this fair value gap and enable, equalize taken, possibly SMT right here. There is an SMT, no SMT, yes SMT between these eyes. SMT, so total soup is validated and this is validated as failure swing. The next expression on the downside, making the weekly range. So that's basically it for this week. I think that don't have much more to talk about. I think that DXY was a more interesting market to talk about because I was wrong on my analysis last week. So that's where we want to focus. I want to focus, and you should focus on your mistakes. So I put most of my focus on DXY, and not on ES because on ES I'm right, and when you're right, you don't have nothing to learn about it. So that's why put most of my focus on DXY. And how could I have been right or not wrong? And what could I do to mitigate my wrong call? And what could I do to know beforehand that my call was wrong and that my stop loss, imaginary stop loss, was going to be taken? So I don't have more to talk about. My throat is hurting because I'm sick, and that's it. I hope me, because if I see this in the future, have a good 2024. Don't repeat my 2023 mistakes, which was running the year, trying to chase and trying to get everything that I want, getting knowledge, getting money very fast, because it's better to take your time and to enjoy the journey than to run, and then you have to and then you have to rest for a lot of time because you're completely destroyed. Your body is destroyed, your eyes are destroyed, everything is your relationships are destroyed. So that's what I'm focusing on, becoming a jack of all trades, becoming better in every aspect of my life. And I hope you have a good year too. I hope that my English and my explanations are getting better because a secret that I will tell ending is that I I have a Discord group with some un, un, entrepreneurs, and we are Portuguese, all of them, and we talk a lot. And we have like weekly calls on Saturday and sometimes Wednesday. And when I try to explain these concepts to them, I someone told me, and I completely view myself as a novice because me trying to explain them what my thought process was very hard and very like confusing for them. And the only way to master something and to really be good at something, and that's why I love Romeo and the way he talks and the way he explains, is because it really sorry, it's because he really mastered the concepts because he explains it the way that's so simple, like ICT. ICT don't explains it simple, but explains it precise. And I was neither simple neither precise. I was like confused, talking a lot, mentioning a lot of stuff that was needed, saying, "Oh, it's very hard to explain because it's in English." So I'm not trying to explain to you in English, and to them I will explain them on Portuguese. But my idea is that once you can be good at something, and when you explain that to the people around you, and to the and to the idea is that there's literally a concept. I don't know what the name is, but when you can explain something to something like a specialist and explain that to someone doesn't understand. So you're a specialist on you are a mechanic and you are a specialist on chasing tires, and you talk to a chef or to a cook and you explain and you explain what you do, what's your model, what's your like schedule or something like that. You explain them what you do in a way that's so simple, so precise, and so easy to understand. That's what is really mastery, and that's why every master on movies, on everywhere explains things either very precise to the point or very simple and very not dense but very flowy, like the flow state. Everything goes like a river, everything makes sense, and that's the point I'm trying to achieve. Like everyone that you follow on Twitter, uh, I talk about Romero a lot, but Trader Day, the TCM, the currency merchant, or and Skitch, actually I think is that name. Uh, Paladin, some of those guys that really make money and are really specialists on trading, they can explain either very precise or very straight to the point and very easy to understand. And that is what's called mastery. And I want to be a master at trading, a master at turtle soup, a master at this craft, meaning that I need to be able to explain this simply to people. So that's why I'm trying to cut my videos down and down and down on less time. So if you go up on the Romeo channel, I will put it right here. Wait a second. So I got the channel. What can you see? His videos are very small. 2 minutes, 5 minutes, 3 minutes, 17, 28, 2, 20, 28. Like they are very small, and I want to be one of those that can explain easily to the straight to the point in some sense, and deliver something that is understandable. That's the main point of trying to express your words and talk. Is to say something that's understandable for the other person. And that's my idea when trying to do these recaps. So I can get better at explaining my thought process, at clearing my thought process. And once I achieve that point, I think that it will be a very good good sensation on masterizing your craft, on mastering your craft. So I think this is all. There's not much to talk about. Oh, I hope everyone has a good 2024 and let's get it.